new video. It's been a short while since I've actually gone and uploaded one of these structures, which I do love, actually looking at and figuring out what are great solutions for people, especially for those high net worth individuals, entrepreneurs, and essentially anyone with a brain who actually would like to protect their wealth, look at their taxes, obviously own properties, internationally across borders. All of this stuff is going to come together in this video here. So welcome to the Guernsey Discretionary Trust, where potentially you would be a settler, and the trustee is obviously a regulated licensed trustee over in Guernsey as well. Could also be maybe Swiss administrated if you want. There are options for that, but you might as well have it all locally, domestically. So what's beautiful about this one, a little bit of a different structure, which I haven't touched into before. Always a big question, what about pensions, right? So Guernsey also offers a self-managed pension trust, where you would essentially be acting as the investment advisor with another trustee that's actually located in Guernsey, that's licensed as well over in Guernsey. So essentially what this can actually do, you can legally protect your global wealth, access to 30% of your pension using a debt mechanism. So drawing down from that, own properties across borders, own businesses across borders, own onshore companies, own offshore companies. And it's all through one structure, right, which is really, really fantastic. So I'm going to walk you through this to the best of my ability, so we can, actually have a look at this legal hybrid onshore-offshore setup. Guernsey is, essentially offshore, but at the end of the day, it's still part of the United Kingdom, just situated between France and the UK. So first of all, if we start at the top here, if I actually just zoom in on this, hopefully you can see it. I know comments have been there before, so the writing's a little bit small. But essentially right now we have at the top of the structure a Guernsey Discretionary Trust. Okay, so you would be the settler, and a regulated trustee in Guernsey administrates the trust. You could also have a third party one if you want one in Geneva or Liechtenstein or London, right? But it's very nice to have one over in Guernsey, as they usually know exactly what's going on, and that's ideal, really, right? So you're no longer personally in control of the assets. That's what this does, And again, this is because Guernsey has a strong legal system. It's highly respected in banking and financial regulators from around the world. Trusts can be perpetual as well, and distributions are fully discretionary and very flexible as well. And again, this essentially becomes your private vault, right? Holding everything from pension assets to businesses to properties to crypto, as we will see as we come down this structure right here. So this is very, very defendable in divorce law, litigation with other businesses or business partners, family disputes. Essentially, it's just an absolute gem in terms of asset protection, and an extremely good product to actually be involved in. So as we move down here, there's a little bit of stuff going on, right? Actually, we'll start on over here. Obviously, you can see the income, which we're going to come back. To, right? But over here, we have an offshore portfolio that's owned directly by the Guernsey Discretionary Trust, which can involve, alternative investments, private assets, stocks, crypto, Swiss bank accounts, XYZ, looking at ETF markets. And because you're in Guernsey, you have that reputation where you're able to still get access to these potential US markets, Ireland ETFs, UK ETFs, European ETFs, right? You can actually, for example, Vanguard and stuff like that. You're in a very, very respected area. Let's leave it at that one. A very respected area. It comes under the same as the UK, essentially. It is the British Isles as well, which is fantastic. So moving on to a new entity here, we have the SMPT, which is the Self-Managed Pension Trust. Again, there's another trustee over here, and there's an investment manager as well, which is IMA, and that's you, okay? So holding funds actually within this, right, is very, very special. So one asset trust, one asset, which is obviously the trust up here, holds the ability to do this, and then you're coming in at the investment manager level, if that then makes sense. Hopefully it does, everyone. And it operates similar to the QROPS situation. So it accepts pension transfers, it can grow tax deferred. And again, what's a really big kicker here is you can legally lend out 30% of these funds as a debt to individuals or companies needed at obviously your discretion. Which, let's say, for example, you had £1 million, pounds, euros, dollars, whatever you're working in right now. This can be lent out to your businesses, holding companies, investment deals, XYZ. So in this example, I was gone ahead and put a UK company and a French company. So they've gone and accepted a loan. Let's say it was $5 million sat in there, 5 million euros, and essentially looking at, maybe a 700k loan. You've gone and bought a small apartment in Paris and a council flat in London, because you're not going to get nothing else at the prices over there, right? And essentially you're looking at renting these out, right? So then you can essentially, the interest, you obviously have to pay back the interest on that one there to your own pension. But then you can essentially, the other income generated from this can then come back into the BVI holding co, which then it's been used as a property management company. And additionally, this company can also own other companies too. So let's zoom out a little bit here. Sorry if I go a little bit fast sometimes. Please let me know in the comment section or even on my email, or you can book a meeting with me. There'll be a link down below, a Zoom link, I believe. Or you can email me at will.hodgson, HODGSON, @forwardpointsolutions.com. And essentially over here, you can then go ahead and get an island. Let's say you have an island and you're trading cotton, right? So for example, you're a cotton dealer selling to USA markets. So again, 12.5% corporation tax over in Ireland, which would then be paid locally, but then you could shift it up due to the management fees or whatever agreements have been put in place by this BVI holding co. And that's a fantastic way to do it. So again, you're still in a hybrid situation where you have complete trust from banks. So banks can be, can be in Butterfields, you can be with, the Julius banks, you could be with HSBC, Jersey, whatever you want it to be, right? You have the capital, number one, and the trust to tick those compliance boxes, so you're not producing red flags and e.g. not being denied from bank accounts. So you have fantastic banking opportunities, which is what it's all about as well. You could have an amazing structure, but then how does it actually work with no bank accounts, right? So you definitely need to focus on these. So you can own foreign subsidiaries from this BVI holding co. And again, this can also act as a business as well. In this instance was a property management company where you're earning royalties and an income into the BVI holding co. Before that, obviously, the interest on the loans have been paid out here. And usually these assets, you would hope, would be appreciating. Your flat in Paris, your UK property, which you're renting out, whatever. These are obviously appreciating. And these companies are in debt as well. So obviously when you sell them, it's a very nice transfer because of that situation that's been structured in that specific manner. It's a very beneficial way to do that. And again, you're still in onshore markets, right? Very, very key here. So when we go back over to here, the excess income within this company can then be sent into the offshore portfolio, which, as I said before, is owned by the Guernsey Discretionary Trust, which, you can reinvest. Maybe you want some more watches. Maybe you want some more assets that appreciate. Maybe you want to buy some REITs. Maybe you want to buy some more ETFs. Maybe you want to buy some more S&P. Maybe it's some more Bitcoin. Maybe it's more Ethereum. Maybe it's more stock, AstraZeneca and co, whatever it is, right? It gives you the opportunity to actually invest in a cross-border situation with great financial opportunities. So you're not just limited. If you did this with a BVI company, you're going to be a lot limited now within investments. Because it's not trusted like your Guernsey location is. And again, it's a straight to trust, very normal situation. So the offshore portfolio is very nice. You can even be investing in private equity funds, XYZ. But what's important here, I'm going to put on the right-hand side. This is not for UK residents. Very important, right? Not for UK residents. So at the end of the day, it's legal, but it must be set up correctly. And most likely speaking, a settler must not be UK resident or UK domiciled. This structure is obviously for non-UK residents, such as Guernsey, Gibraltar, Dubai, whatever. And I've got a list of these ones here. We've got Dubai, Panama, Malaysia, Mauritius, Gibraltar, Thailand, Vanuatu, Bermuda, Cayman Islands, maybe Hong Kong even. You could then add these into play. These are then middle countries where potentially we could see problems. So this could then obviously, you'd have a 10% tax from here if you're then obviously remitting that income. And then additionally, you got CFC rules problems now in here. So Portugal is a little bit of a grey area there. Ireland, you're looking at a non-dom actually regime as long as you're not remitting the income into Ireland. It would work perfectly. Georgia, again, we're seeing a lot of development within the Georgia infrastructure where we can potentially see increased compliance and scrutiny towards their recent, tax-free for years. Malta, non-dom again. There's also Cyprus non-dom would also work out. Could add it to here. A great residence. Paraguay again also works to an extent, but where it's not going to be working is the UK, USA, Canada, Australia, New Zealand, Germany, France, and Spain. I mean, I've got friends in all of these countries, and from what I know myself, how I speak about my own country, I'm very proud to be British. I love Britain, but essentially the core values have been lost in Britain. They are not inviting entrepreneurs there. The crime levels are ridiculous. And I don't know who has been running that government because, quite frankly, I don't even know if they went to school or not because it's bloody ridiculous, So, and my friends over in France feel the same about France. My friends over in Germany feel the same about Germany. My friends over in Australia, at the end of the day, it's just ridiculous. The same as Canada as well. And, there's all these rules that are going to get you caught out and make the structure illegal if you are a resident of those countries. USA is very hard if you have a USA passport, but obviously there are certain things you can do. There's a Malta trust, which is very advisable for USA customers instead of the typical, Guernsey, Cook Islands, Nevis, XYZ, right? So this is super interesting stuff, but these ones here, it wouldn't be legal, or essentially it wouldn't work the way it's meant to work because of your domiciled residence, right? So that's very important. And again, I'm probably going to make a video on some of these countries and what a shocker they've turned into, right? I don't know if you've walked the streets of Toronto or Vancouver. I used to live in Vancouver myself, over in BC in Canada, and it's like walking through a zombie land of people. Maybe I can zoom in to make these bigger here. There you go. So CFC rules. In Spain, we have something interesting now. There's something called Beckham's Law. Beckham's Law is it's a 6-year program. It doesn't provide you with a visa. That's something else. So if you are a UK a passport holder and you only have that single passport, which obviously probably not recommended nowadays, then obviously you can't even live there anyway. You need to then do another visa to then stay there. However, Beckham's Law 2.0 again has no CFC rules. Those foreign dividends are really, really good as well. So, these are the countries which you're probably going to be looking at living in. You've got the Asian, Central America, Micronesia, Asia, UK essentially, but it's next door to Spain and Morocco, right? And Dubai as well, very common nowadays. We are seeing those entrepreneurs, not great for family, but great for young entrepreneurs, networking opportunities as well, great in Dubai. So again, if you did want to have more information, have a bit of a brief chat with me, you can always drop me an email. I'll put my email below and obviously the Zoom meeting link as well. So it's a great structure, but it really depends on where you live. I love this type of structure. I love to be a hybrid, love to be onshore and offshore. This is a really, really nice structure that explains that quite well. Yes, it comes with complexities. You've probably got many questions, and obviously that's why the Zoom link is down there below. I don't charge for Zoom. Love chatting to high net worth individuals anyways, and see how we can work together. So hope that was pretty useful, guys. Let me know in the comment section what you think. Let me know if you have any other videos in the future that you would like me to focus on. And other than that, guys, I'll leave you to it, and have a great afternoon.